Well, good afternoon, Scott Henderson, shooter. Hey, and we are going to go over some charts here at Swing Trade Notes. Of course, at the end of our presentation, please do review our disclosures. All right, so let's talk about the dollar. I was earlier in the week and even last week, I've really been watching the NASDAQ futures and QQQ. Now, we always have some distortion. And, it's my belief here that we have fairly significant intervention in these markets because we're not doing some things that we should. For example, the dollar should be going in the other direction from where we are. I mean, we should literally be breaking out in excess of 100 here, probably 103 to 104, historically, like we have in other indications or when we've been at war, and we're not doing that. And that spread that we're seeing between the futures and the ETFs is significant to the point where at some points you could watch the spread between the NASDAQ futures and there may be a minute to a 5 minute distortion. That distortion is holding for 3 or 4 hours now, where, the ETF will be ramping and at the same time the futures are flushing. So that to me implies that there's significant manipulation going on in this market. And, I think we stay, unless there is a catalyst from Iran, right now we look pretty decent. Earnings have not been horrible. All right. If the Mag 7 report and there's not a lot of negative guidance versus where we were in our last quarter, I think the bias is more towards the upside. And just touching base with TLT, it's still broadly neutral. So we don't really have the catalyst, in other words, a 92 and the dollar to really push equities, but yet we're not at 105 really to flush equity. And that really is the scenario. So we're middle ground on equities. I mean, on the dollar, we're middle ground, just building out the last part of this bottom that we're in. Most likely cases, we get down to about 83 and then we launch. And I think I've mentioned it before where I'm interested in trying to take that long from down there when we get there. Now, migrating over to the S&P here. This is the most euphoric push we've had. It's more aggressive than we had to here off of this April 25 low. It is similar to the 2020 low. However, we did not have three generals there. We did not have three generals here. And we do have three generals here. So if this flag holds that we put in, this is a launching pad, and we are going to shoot. Actually, the 1618 is the likely extension to 978 if it's going to launch. And I just have a really hard time with the dynamics with Iran chasing that. It's staring me in the face. I'm like, I keep closing the chart because I don't want the FOMO to get me. And then I put too much on. I would love a ceasefire or some kind of a solid agreement that looks like it's going to stick. And I don't think we're going to get that for a number of weeks. But right now, the chart is very bullish. This is clearly wave one. We've put in wave two. I think that is pretty much founding. Either this is a leading diagonal where this is our broadest corrective leg, and then four becomes shallower and it should fill out very similar to this. Right now, I'm seeing either this kind of impulse or a rolling meandering impulse. But we do also have the potential of having that very euphoric push that I just mentioned, where, forgive me, I'm putting it in the wrong place, but this kind of a push would be up to the 618, and then we would extend very much like this to the upside. So those are the three outcomes. So, the one nice thing about Elliott Wave, or at least the way you look at Fibonacci extension, they're usually three extremes, which is a third standard deviation off of the mean as far as a high, which is still probably higher up here. That would mean three would push up here, or three standard deviations of the mean to the low. So you have this broad range, but the prior price in the tape can give you some kind of prediction. So right now, I would say if Iran settles, this is our path, the more aggressive path right now, basically with what I see. All right, so jumping over to the NASDAQ, I've got the same visual. I'm looking at this as a leading diagonal. I've not mapped out the other looks on this, but that pretty much is where we are. Looking at over Bitcoin, Bitcoin is getting very constructive here. I noticed Monster was popping up, or MSTR was popping up on my alerts this morning because flow was pushing 90% of the 30-day average. So we clearly have some buying going on here. IBIT is, some cash secured puts here might be a decent idea. My venture into crypto here at this point was Link at $9 roughly. I still think that's a decent play. And the reason is I was looking at just where we are, and I liked the extreme of this particular leg and where we had this aggressive overshoot on price here. So, structurally, it was just a solid trade for me, even though RSI didn't really agree with it. That was sort of my thought pattern on why I went in that direction versus IBIT. All right, let's look at what standalone we have in. We still have AIRO on. Really's done nothing. We were actually getting out of the flat there a little bit better, but I still think we're going to head back up towards 22. So that is a core position for me. Obviously, I just discussed Link, Oracle. It is working. So we should get a little pullback going into this ledge. Now, one thing that clears this ledge, notice how aggressive that 1 weekly candle is. We close this week's candle with any kind of breath up here. So we clear this. We will get a third candle, and it will be up into this 3 fib box, up around 270. Pretty doggone quick. So right now, that trade is working perfectly. We're just holding it, let it run. Now, Sentinel came back out of that low, so that overshoot was there. We've wicked above it. We really need to clear this confirmation at 1556. But at this point, doing what smaller caps do in this kind of market where we've just gone through a decent drawdown and everybody's trying to decide we're doing this price discovery kind of thing. But I see this map kind of here as far as this look. And then Google just ran from where we entered. I think we're up like $35 a share on this one at this point. So we're just holding because I literally think this, what I'm seeing as a leading diagonal, turns into a full impulse. And 3 becomes our longest wave, which would take out that 423.6. And right now, with how, I use a lot of AI, and Claude and Gemini are becoming more and more of my core uses for specific things because their logic is just absolutely fabulous. And that is something that is just going to drive this because I've gone from I think my subscription was $21 with them. And I think last month my usage was a little over 260s, 265. And I'm not running my agents there. I'm running my agents on a local host. But when I move my agents over there, it will 5-10x again as far as the costs. And I can see everybody else doing that. So we have that conversion. I see the conversion coming to Google because of that CapEx investment in that tech. And I see my spending going in that direction to support it, which is one reason I have so much conviction for Google. All right, so then let's take a look at some of the requested names. P Power Solutions, or PSIX. I would look at this as our, hold on a second, I'm looking. Only thing I don't like is that rollover. It broke that roll. I'm going to consider this a flat. This is 1. This is 2. It's broken to the upside. Challenging part is that could be a head and shoulders, which is pretty damn big. This would be the head. That would mean we get a retrace like this, a shoulder, and it comes back and can do this. So you want to be conscious. So where I would be limiting my risk is if that line right there breaks. So roughly 45.82. Any pullback to 60, you can try and use a speed line, sort of a tighter speed line here on this. You should be able to take this wick and it should line up with that shelf, and it does. So you have that breakout, this retrace, and that line breaches, you just set an alert on there, and then I would be trimming. If that holds, then we probably are going to take out the highs, and this was just noise in wave 1. Which it can do, so that would look something like this if it was going to come out there. So, assuming, that was our wave 1, this is our 2, 3, 4, 5. And ultimately, that would mean that our 3 from the previous leg, not confusing you too much, does something like this to the upside. Much more aggressive we get above. So full position size, without a doubt, we clear this wick right here at 120. Then now it has the catalyst, it has the driver. RSI clearly is launching, sort of a launch pad view, because what happens is you have these accelerating mounds and then they're squeezing. So you're seeing a price squeeze. So we should get a tighter squeeze, right? When it gets to the bottom of this, and as long as it doesn't take out the lows of this formation, that will be a launching pad off of that. Now, that might not happen out until May of 27, but the stock looks pretty decent longer term here, as long as this shelf holds at that 46.50. Now, looking at Riley, I think it's Riley Auto Parts, isn't it? BRC Group. I'm not recalling right this second. So you got peaking drive 1, peaking drive 2. We probably get a 3, then an ABC sort of a pullback. And I have a distorted look here. Hold on, I'm fixing this up. So this is a leading diagonal. Should retrace to about the 382. That's what they typically do. So you get something like this. Then you get an ABC corrective leg. Boom, 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 something like that. Whatever the 382 is off of that. So you can come in here and basically measure this whole leg. 382 should be right too, where it chases them and put in a new leg there. So it's nothing wrong, you know. Your confirmation of a full position size, I would say, is breakout at 767. Then I'd have a full position size. That's my 2 cents. I'm sticking to it. All right. NASA. Now, this is a fairly new ETF, isn't it? I've not looked at this one before. You've got clean one, and it's just, there's no history here to measure. But I would say I'm going to look at this as 1 just because of the way that flat is. So you should get a 3, maybe like this. And so let's measure the fib off of that, particularly assuming that's our 1. And when you really don't have history, to me, it's like I'm shooting blind when I look at it. But so the most likely case is this leg ends at the 1618 until price discovery. That's the most likely. The count doesn't share that. I'm just looking at the RSI, the fib structure to mounds, and that sort of implies to me that that would be the case. I'm going to come down. I want to look at this at 4 hours, see if I see anything better on RSI. So you're confirming here. So that, yeah, this is probably 3. You're confirming. We're putting in a little bit of a flat. I would say that's probably a pretty valid look right there. It takes out this prior wick. And now I'm going to come back. Hold on a second. No, change my mind. I give this some room only because it can be developing. So roughly it breaks, 3109 is what I would use as my stop or invalidation level. I mean, you could use this up here if you're really trying to hold, but looks to me like that's developed. What just happened in Iran is going to affect the supply line so much that it's going to delay a lot of different things. So if they can't get components, doesn't mean the value disappears. It just is, instead of them getting their deliveries this month, next month, or the month after, it might be 3, 6, or 9 months out. So as long as their P&L and their profit margins don't reflect a significant decline, or they don't guide aggressively lower, we should just end up in these flats. So that's why I said we could end up in this flat before we get and take off, because in the back of my mind, I'm thinking about the consequences from the war. So just so you get an idea of how my mind works, like you probably know that already. So looking at Big Sky, just going. I don't have a position on that. I called it out. That's for doggone sure. Let me just see where we are. So this is our 1. 3 is probably going to come in something like this. Let me put a fib on that. So 1618, almost right where I drew the line as far as structurally. So 45 is viable. I might be trimming a little there. Peaking drive 1, peaking drive 2. Except for peaking drive 3 measures, if you use equality from this peak, if that's peak 2, peak 3 should come up here around 51 or 52. So that would mean that this extends and does become a little bit of a longer wave. 2618 is up there. It could stretch. That's pretty euphoric. You look at the wedge scenario on there. Let me just draw a wedge line up there. I want to look at that. The visual. I want to look at it from 2 different directions. I want to look at that particular leg. I want to look at the wedge formation here. So you got kind of a broadening formation in this look, right? From where that looked. We're still skirting that line. You look where we skirted the line. We had some lengthy skirts onto the upside. So the distance between here and here is very similar to where we are here. We had another skirt of that line here. This was very accelerated back up to the upside. So you see this little catalyst thing here towards the end. See this little catalyst towards the end, peaking drive 1, peaking drive 2, peaking drive 3. Same scenario, 1, 2, 3. So it is mimicking, my belief, or at least my teachings with mountain theory and Elliott waves. So either, you pretty much can say this is probably a good measurement for 1, which is, so I think I think it's very viable. 51 is how I'd look at it. All right, let's take a look at Netflix. I want to come after the weekly on this one. I have not been following consumer cyclicals, but this looks to me like we're going to lose that. This looks to me like an ending diagonal, right or wrong. Very shallow one, but it's there. And we got this huge flush. Come back and corrected it. ABC is probably in if that's the case. That is fairly common. An extended A in an ending diagonal and a shallow B, right? And then a shallow C is not unusual in an ending diagonal, which would take us we probably, this 89 or 69 is probably what holds. So I'd like it here versus trying it here because we're rejecting price here clean. No reason to even consider long until we clear this body back above 98.82. Okay. And as far as a stop, we close below this wick. I'd even probably only use the body right here, like just a little higher than that. So what is that? If I can get it to stick. Oh, come on. So roughly 91, 93. So 92 breaks below there. I would not be holding long, but nice run from the low off of there. So if you had it 676, I'd probably be taking some profits there. All right, let's look at ALAB. Just run, man, boom. Clean risk. Look how perfect that box was. And I don't ruin that one either. So minimal outcome is $300. Here, minimum. 3 is the longest wave. That's assuming 5 becomes a flat. 5 can extend to the 1618. That's my 2 cents. I'm sticking to it. Hold it. Unless for some reason you need to raise cash for something else that's better. Which honestly, looking at that, I don't see anything better. All right, BE, just going. I think the number is going to head up towards that 3. Let me put a new fib on that one. Probably should have spent more time on ALAB, huh? All right, so 4236. Boy, that's one hell of a move up there. It's 2x from here, maybe 3. I'm just looking at saying, hey, didn't get this gap, we didn't even get into the gap. If we looked at that buy side imbalance, well, actually it did. It just tagged it. Hold on, let me move this thing. Just wicked into it a little bit. Body didn't close into it. Now, if you take, something that, and this is something I found with AI, because we now can see the box. So what you have when you're accelerating in a way or an impulse, a shallower box is not as good as a broader box. If you have this huge gap, like this is a bigger gap down here, right? What ultimately happens is you end up with these declining or squeezing steps that occur in the next. So like if you take this next left, it's squeezing a little bit tighter. Then you take the next step, similar case, it's squeezing even a little tighter, right? And that'll get down to the point where you basically have a little bit of a line. Well, what that's actually telling you is those gaps, as they continue to get tighter up here, it's telling you we're getting ready to roll back over. So, and we're now looking at that on each chart with AI to give us more of an insight on the patterns or that MO that I talk about with the stocks, which I actually just found just absolutely intriguing, that there are other ways where we can use candles to measure what we actually see in Elliott Wave from an internal look. And I think, big data is a massive way to do that. So, all right, well, anyone else have any other names we want to look at? That was pretty quick this morning. NVTS or NVTS. I'm going to call that as our leg. So that's our 1. Very euphoric leg. That's for doggone sure. I'm going to call that our 1. So 3 will either be shallow here, and that's a leading diagonal then, or it'll extend up to the high side. So, minimum $33 from here at 17. That's a good pick, by the way. Good number. All right, let's look at IIPR. Starting to get a little interest there, isn't it? Clean shot, full position above this, roughly 59.36. Roughly that level. That's going to be a straight impulse. We can actually, I'm just going to measure this prior leg to take the MO of what the stock has done in the past. It looks very similar. So except for it's not as defined a flat, actually could be more of a launching pad. Now we have a very extended 5 here. Notice that. So it was a leading diagonal that came out here. So I'm going to assume it's the same thing here. So our first breakdown. So we're going to fill this gap, overshoot it a little bit, maybe just tag the second gap, and then it reject. We'll find out how euphoric it's going to be if 56 holds. If this becomes our new floor. If that breaks, it's going to come back into the pocket. Then it's going to be rough here, probably broaden out. And then we get another leading diagonal. We get a shallow 3 and it rejects again. That's sort of what my thought would be. Weed is being reclassified today. I didn't hear that. I was programming. All right. Well, anything else you guys want me to look at? PI. Good spot for an entry for sure. Full position above this, 131. I'm going to look at this as our 1, 2. So we'll get something that be a fairly broad run. I did it wrong. So it'll be broad. This will be a broadening formation. So you have this flag that I currently see right out of the bat that is, this kind of an ascending wedge, but we've got like an honoring thing that's happened here and it was shallow. So, clearly if you look at it from an incline basis and you just look at that thesis of that we're going to continue to step up, right? In price. So this will become our next shelf. I don't think we skirt that. And then there'll be another one that comes in above that, I would think, sort of the same dynamics. That would be the spread between this low and this low, this higher low, this higher low. So it should accelerate. So I would think, I don't know that we back test this on our next higher low. It would need to take this tag here. So if it tags here, then the next outcome would more likely to be here. But notice how far that wedge builds out. So we could literally be here for a little while. I don't think it breaks out here, but I do think you got a good shot at 260. All right, well, hopefully this Iran war gets settled, and great trading, folks. Until next time.